Hello and welcome to the Building Tomorrow's Insurer podcast, where we explore the future of insurance through the lens of technology and innovation. I'm your host, Nigel Fellowes-Freeman, and today I could not be more excited to be joined by Bryan Falchuk, and he's the President and CEO of Property and Liability Resource Bureau, otherwise known as PLRB. And many of you will know him from the enormous amount of content that he puts out. He's an insurtech advisor, thought leader, best-selling author. I'm sure many of you read his book on the future of insurance and maybe listened to some of his keynotes as a speaker. And so we are very, very fortunate to have him today. Bryan, thank you so much for sparing me some time and joining me today.
No, thanks for having me on, Nigel.
Bryan, I love to start at the beginning. I think understanding where people come from is a really nice place to start the narrative. And so can we start there? Can we start at your beginning in terms of where you came from, how you kind of ended up in insurance and kind of made your way through your career?
Yeah, so my background is very similar to, I think, most people in insurance in that it's an accident. I always say, like, unless your parents were agents, basically you got in by accident for the most part. So my parents were not agents or brokers or anything of the sort. I wanted to do like management consulting. I like fixing things and solving problems and grabbing opportunities. So I saw management consulting as a great path to do that. And there was an opportunity to do that in-house at an insurance company. And I went for it. And there's a lot that needs fixing in insurance. So pretty quickly I went from, not knowing anything about the industry or being interested in it to really not being able to see myself anywhere else. It's like I left for a short time to go to business school and my applications were all about doing stuff in insurance. And I was like, I'm sure I'm the only candidate who's applying on the idea of like, I'm going to go hardcore into insurance. But I did. And I may also be the only one in my class who actually did what they said they were going to do in their essays to try to get into school. But I've had a really cool career, like lots of different functions and lines of business and geographies. I've gotten to work for American companies, British companies, done stuff in Asia. Like I've been all over the place. I just had some really cool experiences seeing lots of different things around the industry. I've been a COO, chief claims officer. And that's sort of led me to where I'm at today, where I get to, you mentioned the thought leadership stuff, like kind of opining and thinking about where the industry is going and why. And because I've seen a lot of those dynamics firsthand and understand some of the inner workings at the carriers and in the functional areas, I think it's given me an interesting perspective to be able to speak to a lot of that, or at least speak to the people who can speak to it. I spent time in an insurer-tech as well. So I kind of been on like both sides of the legacy and startup equation. And I don't know that anyone says this about insurance, but I've had a really fun ride and I think it's super interesting. And I honestly count myself lucky to be able to do that.
Absolutely love it. And you touched on there something interesting that a lot of folks we speak to have got different perspectives on. And you mentioned there that you'd worked in lots of different geographies.
Yeah.
And is there any kind of like big, like broad brush differences that you've seen when you've traveled across the globe from the US maybe to Europe to Asia and APAC, in terms of how the market looks and how where folks are actually in the insurance, I guess, life cycle around kind of innovation and things that are happening?
Yeah, I mean, I think that's an interesting question. I would start with the similarity, and I said that singular, not plural. I think it's this notion like insurance is a relationship business that is a cliche that's overused, but it's very true. And I found it to be true globally. It's such a small world for the, millions of people who work in it. Everyone seems to know everyone. People work for the same, it's like, don't be mean to someone as you're leaving a job because you may end up working with them, for them, or hoping they'll be a client of yours soon enough. And that is definitely true the world over. It's very much networking and relationships, and that matters. So like trust, credibility mean a lot. The differences I think are fascinating in terms of, the insurance, the level of penetration that you see in different markets is wildly different. So, I've written three of the books in my book series, all US focused. The last one that came out was on Asia. And so you've got markets where insurance penetration rates are extremely low relative to the US, but then there's Malaysia and Singapore and Japan and India are some of the countries, China, Hong Kong, that are talked about in the book, and they all have wildly different penetration rates from each other. So what you see as a result of that is, and this is another one of the differences globally, is what products are thriving, what opportunities are there for innovation. I'm very fascinated in what's going on in the insurance markets in Africa, and I say that plural. There's no the African market. There's a series of different markets. Because penetration's super low, there's a lot of cultural differences in the views towards insurance and the views towards getting help from a company for a personal issue. Like that's different cultures will feel differently about that. And then lastly, it's not just like mobile first. You see this in a lot of Asia too. The only kind of computer type experience a person will have had is with a mobile phone. That may be the first phone they've ever had. I mean, that doesn't sound that crazy anymore, I guess, like teenagers and whatnot. But when I was growing up, like we had little curly cords on our phones and they were stuck on the wall. So that just changes everything.
Brian, just jump in there. I remember at home, we had the phone that you put your finger in and moved it around.
Dial.
Yeah, we had a rotary dial. Yeah, I remember that when I was young.
And if you hit the wrong number, you're like, there's all that effort lost.
Yeah.
No, we had one of those. We did have the push button ones as well, and then our neighbors got a cordless phone, and that, oh my God, when they pulled the antenna up, that was just the coolest thing I'd ever seen. The kids listen, like just Google it, you'll see pictures.
You work it out. Yeah.
So yeah, like that just it changes everything, and it's interesting. Like I went to China when I was in college. I spent a summer teaching English and studying Chinese when I was there, and I was an econ major, and so like watching the differences in business there too. Like put insurance aside, it's fascinating to me watching how the way economies and societies develop really changes the way people interact, what they're interested in, what kinds of products succeed or not. It's fascinating stuff, and insurance is not immune to that. So I like watching those markets because I think the new products being developed in Asia and Africa, some in Latin America, I think we in the more developed markets should be watching those spaces to see, could be 50 years, but those could be the products that we look at down the road that, it's hard for us to think like what would be without motor insurance today. It's so common. It wasn't at some point, homeowners insurance, employment practice, like all these different things that we take for granted. I was part of the team that built the original cyber policy. So like cyber's super common now. We could barely beg people to buy it from us back in the day. I think there's things that we haven't even fathomed yet that are sort of brewing in these markets where people don't buy insurance. So you have to be super innovative from a product standpoint, or you're trying to sell something no one will buy. So yeah, interesting stuff going on.
Yeah, and when you think about that, when you think about the product innovation, you just mentioned their motor. I think that's a super interesting product line, especially obviously specifically US, but globally now. BYD's doing an amazing job on autonomy. Obviously, you're thinking like FSD. It looks like it's come on real leaps and bounds, and so maybe 2025 is the year where kind of FSD and autonomous vehicles really start to accelerate in terms of usage. And I know lots of the motor carriers that I speak with are a little bit worried about their books and a little bit worried about kind of what's going to happen there. And so when you talk about that into developing markets, that those motor products may even not get to saturation because they may not be required. Who knows? Obviously, but I guess it's an interesting concept to think about, which is the evolution of the insurance markets that are required.
Yeah, I think in all of what you're saying, I'm sure there's some people who are sitting here saying like, yeah, that's what I'm thinking. And there's other people who are like, oh, that's crazy. It's not going to be like, this guy's an idiot. And because I put out a paper kind of talking about this, and I got a lot of like, he's an idiot, right? Like crystal ball and it's all fake. We don't know, but I think it's really fascinating to engage in it and then ask yourself whether, Nigel, what you just said is true or not, or whether what I put out is true or not, or the dates are right or not, isn't really the issue. The issue is, what if that were to happen? What are things we should be doing today to prepare us for that if it does happen? And are there sort of not totally riskless or costless tasks or steps we could be taking now, but there are certainly things we could do today that would benefit us, whether you or I prove to be right or not, right? Like moving to the cloud, being more flexible in your ability to connect via API with lots of really dynamic data sources and taking in data from sensors and using that in underwriting and claims and so, like all these different things, you should probably be enabling that anyway. Whether we all flying around in shared autonomous pods in 2 years or 200 years or never, I don't really care. The reality is like your systems need to have those capabilities regardless, because those are going to be realities. AI will make that a reality. IoT will make that a reality. And these things could be slow, but they are still going to move in at some point. So why wouldn't you be ready for that and have an organization that has the kind of technical and cultural flexibility to interact with that stuff?
Yeah. And are there any other things specifically on at the executive level on that, like in terms of, executive, you speak to carriers, have you got is there a general feeling of, oh, okay, we should be spending 5% of our time here, or actually this is something that today, like profitability is far more important and something we'll consider in the next decade?
More of the latter.
Yeah.
So I think there's subsets of people at some carriers that are very interested in this. There's some carriers that are a bit more forward thinking and saying, yeah, maybe we should start to partner with the OEMs, the car makers, and think about partnering, whether they go autonomous or not, if they're going to be looking to embed insurance into a subscription model or just part of their sales process. Wouldn't we rather be a part of that conversation than not? So you see some insurers building relationships with car brands for that possibility. And that's, I always, with anything that gets coverage, you have to realize the insurance is not the relevant purchase. No one was like, I wanted homeowners insurance, so I went out and bought a house, right? It's the other way around. Your bank made you do it to have your mortgage, for example. In markets where there's compulsory motor coverage, insurance stands in the way of the sale of the car, right? If you can't get insurance, they can't sell you the car because it can't get registered, can't get off their lot. So now you have to think about the core business that the consumer cared about, the car sale. We are a potential blocker to that. The auto companies aren't going to let insurers stand in the way of their core business. So they're going to have to solve for that one way or the other. And that's why they are looking to have partnerships, to spin up their own carriers, to build MGAs, et cetera, so that they know those cars can go out the door and they can report their sales numbers and show growth and all that kind of stuff. And that's why, Tesla's insurance, I don't know if they've launched it anywhere outside of the US, but their reasoning in the US was insuring a Tesla is incredibly expensive. And that was standing in the way of their sale. I looked at a Model S years ago. I probably had no business financially looking at it, but I'm a car guy and I thought it was cool. I did not get it. But after I realized, like, no, actually, it's not the right move for me, I looked into the insurance out of curiosity, and it was like 5 times more than I was paying on a nice car at the time. That's a deal breaker, right? Like if you're paying $1,000 a year and you're now paying $5,000, I think a lot of people would at least pause on that decision, right? So suddenly you need to solve for that if you're trying to sell those cars that are going to cost $5,000 a year. And that was the impetus for Tesla launching its own insurance. It wasn't to be an innovator in insurance. It was to solve for a blocker to their core business and their growth trajectory that they have to deliver on. So I think we need to wake up to that kind of the pressure in the core industry that we end up covering.
Yeah, and I think that as an example is an interesting one, as some of the things that we mentioned a little earlier, which are kind of connectivity into data, like changing some underwriting, delivery of the policy itself being kind of with the asset, and maybe dynamically pricing. Has there been any, I suppose not the naysayers, but the critics of that approach of what we're very much kind of focused on? What are the claims ratios going to look like, and kind of is the book going to be profitable and those kind of things? Is there any data? Do you have any idea on any data that's come out on the Tesla book and kind of how it's performing generally?
Yeah, I actually just interviewed someone who shared the stat, and now I can't remember who it was or what the stat was, but it was 100 and some odd % loss ratio, like 140, 170, something like that. Very unprofitable. Wow. I was a guest on their show. They weren't on mine. That's what, it was people in a embedded, commercial motor space. So like they would have reason to have some insight on that. I think that's fascinating, but then you have to ask, okay, well then that's not viable. And so an insurance person would say like, that doesn't win. But you have to remember, it's not a standalone business. It's part of a different story. If it's from the manufacturer, now you've got supply chain benefits on the repair side. You've got other profitability that you can't subsidize it completely, but the expense ratio may have some upside to it. Not enough to make up, basically double the losses over the premium. But there's other economics at play that a standalone insurer wouldn't be able to leverage. My bigger issue is a single maker doing their own insurance solution doesn't really work when your product line is as kind of one note as Tesla's. I'm not an Elon Musk or Tesla fan, if you haven't figured out, but they have a very limited product portfolio. And any auto insurer, motor insurer will tell you that is like, you insure 4 different kinds of cars, like that doesn't work. You must have some variety in the types of cars, the way that they're driven, the types of buyers. There's too much homogeneity in that population of vehicles and buyers to make for a viable risk pool. And that's where I think, you look at Ford or GM or Toyota, these like full line, well built out populations of vehicles and buyers. A single like manufacturer insurance company that could work with them, or Hyundai. I don't think it works with Tesla, Rivian, Lucid, the way that they are today. Maybe one day, but not right now.
Yeah, it needs potentially needs many years of underwriting improvement, like cost change, et cetera, to understand how you can get that 145 down to 95 or wherever that number needs to be.
Even that's totally unviable long term.
Yeah, it's going to take some time. Yeah.
Whereas, you look at the real leaders in motor insurance and they're not anywhere near that. So that's, you really need to be in the sort of like 50 to 65% range to be genuinely amazing at what you do. And I don't think you can get there with that level of homogeneity. Even if you had 10 million vehicles on the road, it's still such a limited population of vehicles and a buyer type. I don't think that works, but I could be wrong, and I don't have a problem with that, but let's at least engage in the conversation,
Totally. So, Bryan, I would love to step into your book a little bit. You mentioned a little earlier that the last one was specifically on Asia. Would you mind just like taking us into the book just a little bit? Just give us a highlights package of the book, a bit of a summary of maybe some of the outcomes that you found.
Yeah. So I'm not going to do that with the Asian one because I didn't write it. I just oversaw the project, so I'm not expert enough. But what I will say is, so there's 4 books in the series right now. There are some others in the works. I only write the ones that I have any business writing. I'm not an expert in Asia, so I worked with a woman named Teresa Blissing who is, and she did a fantastic job on it. But all of them are firsthand accounts. We get in with the companies, and it's not just like looking through press releases and whatnot, but actually like talking to the people who lived it to understand something major that they did to innovate, to evolve, to push forward. With legacy carriers, it's usually a specific product or initiative or transformation. We've got 2 of the books, the Asian book and my second book, are following startups from inception through to some level of scale. And it's really like their journey. And again, firsthand, and it's not all roses. If you want like purely rosified story, go to a conference and they'll tell you the story on stage and everything was perfect and on time and on budget. And like, that's not what happens. And there's no lessons in that. So for example, in my second book, which is following 8 startups in the US market, one of them laid off 45% of their staff and had their fronting carrier pull capacity and start to steal their business and almost put them out. Like they ended up suing them, almost went out of business. Like that's all in there. Because you can't just say like everything was perfect. And because at the end of the day, people must take away, what can I learn from this? And so there's these, I call them foundations for the future, these lessons in each of the cases. And then there's sort of like meta lessons overall that whether you're legacy, startup in the US and Asia and Germany, like doesn't matter. These lessons really are quite universal. So as an example, it's in the third book is all about collaboration between insurtechs, startup insurtech solution providers and legacy carriers. And it follows the stories of them working together.
That's right up our street. That's perfect. Let's go to this one. This is great.
Yeah, it's a good book. And the stories there are about really like focus on that relationship between the two collaborate. It's called the collaborators. So it's about how are they treating each other. And that's, you could say, well, we do everything, we build everything ourselves. We don't have collaborators. And it's like, well, are you talking about IT like it's a person? Like IT did this, IT did that. I've worked at enough companies to hear IT referred to as a mean person who is incompetent. I said I work for British carriers. London was this like horrible man who, like, London won't let us do that. I'm like, who is London? But that's about bad collaboration and bad teamwork and us against themism, which can be an internal us and them or external us and them. So, how are you partnering? How are you establishing those roles? Are you treating one another like vendor and customer? Are you looking to lay blame, or are you taking those lines out? And this is sort of obvious stuff. That's not where the lesson lies. The lesson is in how do you actually pull that off? So, the first like foundation for the future in the book, the third book, is to make fast decisions, make good decisions, but quickly. That is not an earth-shattering revelation, right? Like, no, I thought we were supposed to make terrible decisions as slowly as possible, right? But it's like, that's obvious, but we don't do it. So the question is how. And so what I actually do is use these cases to lay out with much more specificity. Like, there's a core system project that was a movement from legacy on-site, on-prem to cloud-based, and major product. They finished in a year. My joke is, like, every core system project, you scope it for 3 years and you're in year 8 of those 3 years. Like, no one gets it done in 3 years. So how do they do that? And so I lay out, like, this is how they structure their steering committee and the steering committee meetings. This is how they went into key decision making and making those tougher calls about things. And this is the whole configure versus customize, that everyone says we're just going to configure, we're not going to customize, but they all customize, and then they can't take upgrades, and and it's all painful. How do you actually make those calls so that you're not stuck? And I kind of blow all that out in the book and talk very specifically from these examples, so you can see it in practice, and you can see when they go wrong and how do they recover from that, so that they can make good decisions at scale. For example, they can be one as a team and not us against them, and it's the vendor's fault and we fired them and hired someone else, and now it's their fault and we'll fire them and hire another one. So yeah, lots of lessons. There's 12 of those major lessons across 4 books, so that's why I'm not quoting each one.
Yeah, of course, and that completely makes sense. I think the us and them, the vendor kind of business relationship, like even the terminology, right? As soon as you kind of class as a vendor, you kind of even just we found internally when, like, thinking about it as a partnership, thinking about it like that, even just that as a narrative, as a semantic, does make a meaningful difference in terms of conversations, but on honesty and candor that you can have to be able to make the prioritization decisions to get things out in a timeline that's required, being able to get the executives on board who are not in the detail. They don't see the day-to-day kind of delivery, they just see the end result, really. And so making sure that it sits right at the top level. That's what we found, that top level of partnership then filters all the way down through being able to get stuff done versus like a pure transactional relationship of vendor and business.
No, spot on.
And when you just kind of extending it, I'd love to maybe step in and start gazing into the future.
Okay.
Navel gazing is kind of nice to do sometimes, and think about, I'm sure that you're doing a bunch of thinking every day around where are we going, what's happening. We've managed, I think we've got about 25 minutes through the pod and haven't really gone deep into AI yet. So we're going to have to touch on it, otherwise we'll be cut down. And so, when you're thinking about the upcoming year, like, is there anything that you think these are going to be some meaningful changes we'll see in the market? Do you think it'll be very slow and iterative? How are you kind of thinking about the upcoming year?
Yeah, I mean, I think there will be, I do expect there will be more use of AI, and I think it will be sort of the same old that is like focused on efficiency. And that's fine. So, I'm coming across in February to speak at an InsureTech Australia event, and I'll be talking about this. I'm giving away the plot a little bit, but we don't really have an efficiency problem in the industry. And that's not to say we shouldn't try to get more efficient and be like, I was a management consultant. I love efficiency. I love lean. I'm all for it. But if you look at the economics, it's not really the expense ratio that's the problem. When you see carriers who are like the Tesla example we had, or plenty of others, it's not because their expense ratio is high. It's because the core underwriting result is not good enough. Be as efficient as you want, lay off all your staff and have a computer that somehow costs you nothing, do all the work. If your book is not written right, it will continue to be unprofitable. So care about efficiency, but don't just focus on that. I think we're still stuck on that because you can size it, you can deliver to it, you can talk about it publicly. CFOs love it from a quarterly results standpoint. I totally get that. But if we don't get off that efficiency sort of drug that we're on, we're never going to actually get to the real issue, which is underwriting results. So that's risk selection, how we price it, and then what we do once we have it. So are we actually predicting and preventing, or are we just paying for it after it's happened? And then when we have a claim, what are we doing on the outcomes to get that claim resolved? That's where our AI really needs to focus in. And I think we're still a ways off from that. And there's not to say there aren't examples of that happening already. Recently came back from ITC and I talked to a founder who has had a lot of success. Their solution, AI driven, has a lot of indemnity improvement in it. And they don't talk about that at all in any of their sales pitches because he told me no one believes it and no one wants to hear about it. They just want to hear about efficiency. So they make all their sales off an efficiency story. And then once they're in, they go back and like, oh, and look what happened to your indemnity and see how much better it is because of this. And I was like, but why won't you lead with that? It's like, they won't listen. And I get that because I sold an insuretech solution that had a big indemnity benefit, but generally people didn't care. I would love for 2025 to be a year where we start to wake up to that and make that shift. So I keep talking about this in hopes that like, if I can plant enough of these seeds, maybe it'll take hold. But I don't think it'll happen in 2025. I think we'll still care mostly about AI for the sake of being more efficient, which is okay. It's not a bad thing. But I would love us to put things in place to watch what happens to indemnity as a result of that and start to seek that out in the solutions that we put in place. They may even be less efficient in some cases, but why would you want 1% efficiency gain or shave a point of expense ratio if you can get 10 points of loss ratio? I'd take that all day.
That was it. I think it was Charlie Munger that said, like, show me the incentive and I'll show you the behavior. And this is exactly right. The efficiency, if you think about what's the incentive for the CFO or the board, etc., is to have a marginal increase on EBIT or whatever it is. And so they're looking for their kind of 1.2 point gain on the efficiency versus what's the step change of improvement you can have on underwriting.
Yeah. And the other thing is that underwriting result probably won't benefit them. So even if we could start to capture it now, because insurance is like, there's a tail to it. So, is that CEO or CFO who's making the call on, we'll put 10 million pounds or dollars or euros or whatever into the solution? Is the payback going to happen while they're still here? Or did that just cut down their potential bonus right now? Consciously or unconsciously. I'm not saying anyone's doing this maliciously, but it makes sense. I mean, there are a number of carriers where the C-suite's bonus is tied to the size and growth of the surplus. That inherently will dissuade you from making long-term strategic investments. Doesn't mean you're doing it because you're a bad person or a bad business person, but you will have an inclination internally not to make those kinds of calls that will benefit your successor or your successor's successor. It's human nature. And I think a lot of that is happening on, kind of subconsciously. I won't say unconsciously. But we need to get past it.
Yeah, and we do need to get past it. And one thing you mentioned there, which was we mentioned a little bit earlier around collaboration and then kind of the sales cycle of an insurtech into carriers. When you've have been having conversations broadly around kind of AI technologies being applied within carriers, have you been seeing it more the carriers using third parties and using insurtechs to deliver that, or have you
Yeah.
seen more the carriers going, no, actually, this is something we need to own and we're going to upskill and hire for and build internally? Have you kind of
Yeah.
seen a disparity? Or
For AI, I've seen more the outsourced approach. And more of an openness to the kind of laser focused point solution that like, this is the AI for that. Like it's generative AI, but not general AI. So it's still specific to fraud or to, you know, whatever the solution might be. There are some carriers who are very, I think, hubris filled about their abilities in house. And, you know, I've talked to one several times. I've had the same conversation with them where every time it's the same one where we have over 100 data scientists. They're incredible at AI. They can build something better than, you know, this insurtech we're looking at. And they may be right. The problem is they will be right now and never again in the future, because any model you build, if it only learns off your data, inherently, I don't care how big of a carrier you are, it will never be as good as cross carrier data. Because let's take fraud as an example. If you're this particular carrier was a $40+ billion carrier, like no doubt they have a lot of data and they have a lot more data than most other carriers out there. And much of the industry may have. But one of the problems when you talk about fraud is the fraudulent actors, the professionals at it, not the one-off, you know, idiots who are kind of making off with a buck. They know better than to commit the same fraud on the same carrier more than once in a, you know, some period of time, which means that carrier's in-house built and only educated model off their own data will never catch that fraud, because the fraudsters know better than to create a pattern for that ML to see in the first place. That's a problem. You cannot solve that yourself. You can only solve that if you can see across the industry. So whether it's fraud or driving patterns or any number of other things, if you're not getting a broader base to educate the model, you're going to always be behind it. So no doubt, day one, when you release a model, it may be better, but that edge will very quickly wear off as those other models that are perhaps more inferior than yours start to outlearn it. And so they will progress much faster, and you will always miss things. No matter how great you are at your job, you will always miss things that they can see, which provides another interesting dilemma for carriers looking at going with the open, you know, the third-party solution is so that my data is helping my competitors. My data, you know, it's learning off my data and then it's going into my competitors and making them better at what they do. That's not fair. I get that. So what you need to ask yourself is there a level of specificity to your deployment? You know, is there a baseline learning that the model gets, but then there's specificity for your particular product suite, for example, or your particular distribution footprint that is not allowed to go back into the core model? And can you validate that there's actually that level of ring fencing? And there are solutions that can do that. So to just write it off, I think, is the mistake. So to say, like, we have to build it because there's this competitive risk, that's a mistake. That's ignorant. You should be looking around and push those vendors on it and get them to prove it to you. But don't go in presuming it can't be done. But also don't go in eyes wide shut, you know, that, oh, no, that'll never happen. It's like, no, you should be aware, because you may accidentally step into something. And you asking the question could push that vendor to create an even better solution.
Yeah, totally. What you said there is exactly what we've seen, which is specific workflows, specific point solutions for kind of individual pains that exist.
Yes.
Has been kind of where we've seen, the AI startups or vendors that have, or businesses that have kind of put AI kind of layers on top of their current stacks, been really successful. It's really just targeting specific like business pain workflows. I think that's kind of makes sense, right? Which is like, what's the most painful thing? Is this kind of, we don't have to expose risk to the really broad, like the broader business. We can actually deliver it on a very thin slice and start to understand and taste it and get business like executive buy-in and all of those things, right? It kind of makes sense that you go kind of thin and deep on a single area with like a new technology, I think.
Yeah. We just have to be careful not to leave them siloed. And, you know, I think that was one of the the things people got reminded of in COVID is we built out all of these point solutions just to be able to keep doing business because we had to. Someone had to join that back up. And so as we have all these solutions for all these different things, the value is bringing that data together. And I always say, liken it to like, a crime movie where you see the investigators board with like pieces of yarn and pins and like all connecting it together. There's all these nodes of very interesting actions and data and interpretations. To be able to pull that together at a meta level is, I think there's a ton of insight to be had there. Like what could you know when you're handling the claim that came from all the other interactions that were going on with that customer or prospect or claimant or whatever across everything else that you do that could inform better decisioning in this moment you're in right now. I think that's fascinating. And you can't do that if you just have point solutions, no matter how good they are, that you've never had a sort of global view as like, yeah, but what do we do with that? Which goes back to my original point when we were talking about autonomous cars is like, do your systems have the flexibility to work with this like huge web of very dynamic and constantly changing variables, inputs, signal to make sense of it all? If you can do that, I think you'll rule the world in a good way.
In a very good way. Very good way. To bring those things together, is obviously there's a bunch of young companies that listen to this pod, and lots of them are trying to sell into these carriers. And obviously you've got a bunch of experience across the value chain, and you've spoken there a little bit about kind of the efficiency versus liability kind of positioning in the go-to market. Is there like maybe 3 or 4 key things that you would say, like give advice to any kind of young company who's trying to sell into carriers of, and these are 3 or 4 things to be really thoughtful of when you try to sell into the enterprise?
Yeah. So I do think, I think a lot of industries, this will be true, but I know it's true of insurance, is a generalist approach is not a successful approach in insurance. I think you need to be of insurance and focused on insurance, and that matters. And that doesn't mean you have to have worked in the space for decades. You can get smart on it, but do that. And there are enough ways to get smart on how does insurance work? What's their economics like? What are the functions? What does that mean? But then also recognizing there's no one kind of format to, okay, it's a 5 billion plus carrier. That means this is how you go to market with them, or this is how you try to sell to them. I will show you 2 carriers who look exactly the same outside. You cannot sell to them the same way and hope to have any success. They are wildly different under the surface. And I've seen a lot of VCs who don't understand that either. So if you're getting funding from kind of a generalist or outside of insurance space, they're probably not going to pick that up, and they may be pushing you. You got to get smart about that. There's no tier 1 sales approach and tier 2 or regional sales approach or whatever. Each one is unique. I mean, back to that original point, the consistency I see globally is relationships, right? You need to figure out like, who is this company? Who matters there? Where's the seat of power? And figure out how to navigate it, which means build your network, build your credibility, go to the events, be on LinkedIn, and don't scattergun them. And the number of LinkedIn messages I get from people who are like, agents like you. I'm like, I'm not an agent. And if you spent 3 seconds, you would have figured that out. Or insurance companies like you. I'm not an insurance company. Know your target. Don't, and the LinkedIn sales gods would tell me I'm dead wrong. I will tell you they're dead wrong. In insurance, not only will you have no success, people talk. And so it will go around as like, oh yeah, that guy's super annoying. He hit everybody with the same message and it was pointless. You don't want that. So spend the extra 10 seconds to qualify a lead and understand how to go after them. And look, I ran a sales team doing this. I'm not a sales guy, and we were very successful. So like, and I've helped a lot of startups do this too. It's a relationship space. Credibility matters. Take the time and be specific with it. And you can figure that stuff out from LinkedIn, read their annual reports, see what the structure is like, where the power seems to rest. I say work for British carriers, work for 2 of them that on the surface look exactly the same. One of them was highly regionalized. One of them was global. If you're trying to sell for the US business to someone in the US, you'll get nowhere with the globalist. You have to go to London. And with the other one where it was regionalized, if you're trying to sell to the US business and you learned from the first one, you go back to London, those are some very interesting conversations, and they'll go nowhere. You've got to find the person in the US to do it, because that's where the decision was made for the US business. that's a nuance that you can learn pretty quickly if you just spend a little bit of time getting smart on it, talking to people, reading the annual report. So yeah, put the time in. And that's my basic advice to everyone. The net result of that is, how does the sales conversation go? If you're a tech selling tech, they'll see tons of that all day. You will blend in with the rest. They won't be able to tell the difference. If you're an insurance person, talking to them about the issues they're facing, how you understand that, and this is how to make it better. This is the best sales meeting you have, is they fall back in their chair and they're like, oh my God, this person understands why my life is so hard. And it's not because I'm a dinosaur or I'm an idiot or, my industry is too slow. It's because this stuff is really hard. They get it. And they have something that could actually help with that. That's the sale that I don't care who comes along cheaper or whatever, is you're in. That's a relationship. That's not a sale. And that's when you're truly successful. And that comes from doing a little bit of extra homework up front. I say, you wouldn't apply for a job without researching the basics of the company, right? You're not going to stand out versus any other candidate. It's no different in sales. So yeah, get smart on not just the industry, that individual company, the people you should be going through. And it can be a very slow process, but work it. It will get there.
That's fantastic advice. I could speak to you all day, Bryan. I want to end on something in terms of, this is obviously that we're talking about building tomorrow's insurance. So I'd love to end on what does insurance look like in 10 years? If you kind of fast forward yourself a decade, and this is a very hard thing to do. We could be 200% wrong on either side of these kind of things. And so I'd love to just get your take on, we fast forward 10 years, we're having this podcast again and we're having a conversation. So what do you think the world of insurance might look like in a decade?
So historically, it's been kind of an ebb and flow or cyclical business where there's hard markets and soft markets. You make a ton of money and then you don't make very much or you lose a bit, but on average it works out. There's still people who believe that to be the case. I don't. I think that has changed. And I think we're in a period where a legacy mindset would say it's cyclical, and a more modern mindset is recognizing that's not the way capital works. It's not the way innovation works. That's not the speed of change anymore. It's not the way consumers work. So cycle's gone. I think we're in this moment where, especially if you're newer to it or you're of a new generation that's willing to push through, this is a moment where learning how to be successful, whether the cycle is high or low, is the path to being overall consistently profitable and successful. And I think this is that transition point for insurance. So 10 years from now, I think we will have been transitioned. This talk of the cycle, I think, will largely be, you remember how it used to be that way? And I think it will be more about efficiency matters, but look, we have to be profitable in this core business, and we have the tools to do that at a very specific micro accuracy level, because we recognize the importance and we were willing to invest in it. And I think for people who are wishing we were there already, just keep at it. I don't think 10 years is a crazy amount of time. I think it's actually pretty quick, but I think AI will help us be faster than we would have been if we were doing this 15, 20 years ago. I think it can happen in 10 years. There's also about to be a turnover from a leadership talent standpoint over that 10 years. I think that will help as well. Lots of great leaders today, not knocking any of them, but as dynamics change, so should our view on those things. And I think just all of this progress is a positive thing. And we'll get to this place where it's more precise, accurate, dynamic, responsive. And frankly, I think it's a lot of fun. It's a ton of opportunity in that.
Yeah, I'm in your camp. I'm very bullish on the business. I'm very bullish on the market. I think that often insurance can get a bad rap for not innovating quick enough. But I actually think if you look historically, yes, some of the fundamentals have stayed the same, but it's been something that's been around for a long time and managed to navigate a lot of different transitions through different technologies. And I don't think that this period now is any different to history. And I think the people and the opportunities is fantastic. And so it's about embracing it. I couldn't agree more. Bryan, look, thank you so much. It's been such a fun conversation, and I will be there in a month or so's time when you're down here in Australia and talking to us. I'm looking forward to having a coffee or having a beer with you. Really looking forward to that. And so thank you so much for your time today. It's been fantastic.
Thanks for having me on, Nigel.
Pleasure. And everyone, I hope you really enjoyed the episode. make sure you do jump over to YouTube where you can get the video version and see our faces. And if you obviously like to hear more from other industry leaders who are pushing the boundaries of insurance, please do check out our other episodes of our podcast series, Building Tomorrow's Insurer. And you can check out fantastic episodes just like the one we've had here with Bryan. Bryan, thanks again. Have a wonderful day and see you in a few weeks' time.